There's things like the Dow Gold ratio. So you're taking the stock market going back into the late 1800s, and you're comparing it to gold and eliminating the currency by dividing the stock market with gold, or vice versa. And you see its value of purchasing power of real stuff. And then there's gold versus the currency supply. So you've got the quantity of gold and the quantity of currency. And then you've got the price of the currency, which is, when you divide them, you're seeing whether the currency is having more purchasing power at sometimes, and what you see is that throughout history, currency or the stock market will gain in purchasing power and I call this a wealth cycle. They'll gain in purchasing power for a number of years, and gold will be losing purchasing power measured against that. It buys less and less and less. And then if that continues, for instance, since 2001, gold has been, with the exception of cryptocurrencies, gold has been the number one performing asset class since 2001. The stock markets are up 150 or 200% since 2000. Gold is up about 600% over that same time period. And so it's outperformed. So the stock market, everybody thinks it's going up, but measured in gold, it's selling at a 66% discount from where it was in the year 2000. So stocks have been getting cheaper measured in gold, not more expensive. Now, this has little ups and downs along the way, and gold has been in what I call a mid-cycle correction since 2011. I don't consider the 2011 to 2015 pullback a bear market, even though it is greater than 20%. I consider it to be the same pullback that we had from the last day of 74 or first day of 75 until I believe it was August of 76, when gold fell from about 200 back to just under 200 to 103.
Before going to 800.
Exactly. It went to 800 I can't remember. It was just, you're talking about the end of 76, and by January of 1980, it was 850. So huge gains. I consider the 70s bull market in precious metals one bull market with a mid-cycle correction that flushed out all of the weak hands. But the thing is, with precious metals, this is the foundation. This is money, not currency. Everything else is like stacked on top of this. There's a reason that most central banks have gold, and they don't, some of the Western central banks have sold gold, but the rest of the world's central banks either never had it, or they've got it now and they aren't selling, or they've got it now and they've been buying over the past, and a lot of them have been buying, especially like Russia. They've been one of the largest accumulators for quite a number of years now, and it's going to serve them well. This is the thing that can't evaporate, and
nor can oil.
Huh?
Nor can oil.
Right. And so the oil exports, they'll probably end up having to shift a lot of this to China, and they're not going to trust the West as much anymore. It's a bad situation that we're in, but I do expect that you're going to see a big problem in the world economy in the coming years, and people have to get ready for it.